Let me start by saying this very clearly. Most Nigerians don't get into tax problem because they want to break the tax laws, but because they believe the wrong things about tax in Nigeria. And with all the conversation going on online about the new tax laws, a lot of confusion has been flying around. So today, I will clear 5 more misconceptions about the Nigerian tax law. And number 3 will shock you. Misconception number 1. The tax man will tax every money that enters into my bank account. Wow, I see this everywhere, even on social media. Everyone is talking about it. Everyone seems afraid that when money enters into your bank account, the government will tax it. But let's be clear. Section 3 of the Nigerian Tax Act clearly states that you will pay tax on your income, your profit, or your gains, not your savings, not your transfers, and definitely not any money sitting in your bank account. So receiving money into your bank account does not create automatic tax liability, except that qualifies as your profit, gain, or income. Misconception number 2. Gifts and money sent to me are taxable. A lot of people are worried that when they receive gifts, the taxman will come after that gift and also let them pay tax on them. But that is not correct. Under the Nigerian tax laws, gifts you receive are not taxable. Because, come think of it, if someone is going to give you a gift, that person should have paid tax on that money before giving you the gift. So when you receive the gift, you are not under any obligation to pay for that tax on such gifts. Misconception number 3. If I describe my bank transfers as gift and loan, then I am safe. A lot of people believe that if they use certain descriptions on their bank transfers, then tax obligations will not arise. But that's not how it works. Bank narration might be helpful, but that is not the full story. Because what the taxman is looking out for is not your wordings, it's the actual nature of your transaction. So the safest approach is not clever wordings, but proper record keeping and honesty about your source of income. Misconception number 4. Small businesses and side hustles don't need to worry about tax. This is very common, but the law did not say small businesses and side hustlers don't need to worry about tax. Now for the records, a small business is a business that gets annual turnover of 100 million or less and has a fixed asset not exceeding 250 million and does not render professional service such as doctors, lawyers, auditors, accountants, and every other person that renders professional services. So even if you're a small business or a side hustler, you still have obligations like registering for tax and getting your tax ID, keeping proper records, and filing your tax returns. Because tax compliance is not just about paying the money, it's also about keeping proper records and filing your tax returns accurately and as at when due. Misconception number 5. If the tax authority had not reached out to me, then I do not have tax to pay. A lot of people think that if the tax authority had not reached out to them, then they are fine. They don't have any tax obligation. But that is not correct because Nigeria operates a self-assessment tax system. This means that you're expected to self-assess yourself, file your tax returns, and pay your tax. You don't need to wait for the tax authority to reach out to you asking you to pay your tax because when they do, you are definitely paying penalties. So to do your self-assessment, you can reach out to any tax lawyer, a tax consultant, or an accountant to do that for you because silence of the taxman does not mean safety for you. So the truth is simple. Nigerian tax law is not scary as people make it seem. In this channel, we debunk all those misconceptions. So follow TAMAR, let's master tax together. I remain Ruth, your tax lawyer.